Most high-income professionals don't have an insurance problem. They have an insurance accumulation problem. And most don't even realize it yet. If you're earning well and haven't reviewed your insurance in years, this video will help you do that clearly, without canceling anything, without panicking, just seeing what you actually have. Because as income rises, the structure of your insurance portfolio often doesn't evolve. Old plans remain, new plans get added, but there's no rationalization of your insurance need. In the next few minutes, I'll walk you through what to gather, what to look for, and what signals that something may be structurally off. Just a calm review, clear thinking, no drama. Now, you see, the higher your income, the more exposure you have. More dependents, liabilities, assets. So naturally, you add protection. But what I consistently see is this: insurance portfolios grow without any disciplined review process. And this isn't about blaming anyone, it's just what I consistently see. I'll be honest. Sometimes I see too many high fee plans that were purchased at different life and career stages without a clear review process. And it frustrates me because people end up paying too much for too little coverage. Not because they're careless, but because no one stepped back to rationalize the structure of their insurance portfolio. That's what this video is for. Now, before you optimize anything, you need visibility. So here's what to gather: all policy documents, every annual premium amount, every coverage figure, every rider, and your latest fund values if applicable. Everything in one place. I've reviewed portfolios where people didn't even know how many policies they had, and that's not uncommon. If you don't have everything in front of you, you're not reviewing structure. You're reviewing fragments, and that won't help. By the way, if you want a simple checklist to walk through this review step by step, I created an insurance audit playbook. You can comment audit below and we'll share access to it. Now, once you've gathered everything, here's what to look for. First, total annual premium. Do you actually know what you're paying per year across all policies? Not per policies, total. I've seen families paying hundreds of thousands annually without realizing the full number. Clarity starts with totals. Second, premium versus coverage alignment. When it comes to insurance, less is usually more. Expensive coverage doesn't necessarily mean you're getting the most bang for your buck. Expensive doesn't automatically mean efficient. So ask yourself, is my coverage proportionate to what I'm paying? Or does it just feel substantial because the premium is high? High cost can create a false sense of security. Third, drag from charges and policy fees. Some plans only really perform well if market conditions are exceptionally good because of hefty fees. And they can lose meaningful value to charges even if markets are just marginally good. But the bigger issue isn't the product, because today isn't about product debates, it's about structure. In other words, does the overall design of your insurance portfolio actually make sense? Fourth, accumulation of policies without assessment. Another pattern I see often is that new plans are taken out without assessing the need for them. And so over time, you don't have a system, you just have a stack of decisions across different life and career stages without one integrated review. Now, ask yourself a few diagnostic questions. Do I know the purpose of each policy? Are life and health coverage clearly identified and separated? Are riders intentional or just added over time? And here's a sharper one. If your income doubled tomorrow, would the structure of your insurance portfolio improve or just become more expensive? That question alone reveals a lot. If you haven't downloaded the insurance audit playbook yet, comment audit and we'll send you the structured guide. It'll help you walk through these questions clearly. So remember, high income doesn't automatically create strong protection. Clarity does. Structure does. This review isn't about canceling policies today. It's about understanding what you're paying for and why. And once you see clearly, better decisions become easier to make. In the next video, we'll look at 5 insurance myths high earners quietly believe and how these assumptions keep this overaccumulation pattern in place. For now, start by reviewing what you already have. Clarity first. Everything builds from there. I'll see you in the next episode.